Hi everyone and welcome back to Next Generation Business School, where we empower future leaders in business and finance. My name is Amin Shakulu, and on this channel we dive deep into accounting principles, tourism accounting, financial management, business strategies and economics insights. So stay tuned and let's unlock top strategies to help you excel in your studies and future career. Please don't forget to like, comments, and subscribe for more valuable contents. And remember, every expert was once a beginner, and with the right knowledge and determinations, definitely you can achieve greatness. Your journey to success starts here, so let's get started. Okay, tourism and hospitality business generally differ from manufacturing company. This is the reason that we want to focus on today's subjects under the merchandising activity, income statements and financial procedures and recording methods under the hospitality accounting, tourism and hotel management. While manufacturing companies typically produce their inventories during the manufacturing process, tourism and hospitality businesses primarily purchase this inventory to support their operations. And the operating cycle of tourism and hospitality business is often shorter and less complex compared to manufacturing companies. Instead of manufacturing goods, tourism and hospitality businesses focus on providing services and experiences to their customers. And this involves activities such as booking reservations, managing accommodations, arranging activities, and delivering hospitality services. For example, Little Worldwide, another prominent hospitality company, known for portfolio of hotel brands catering to both leisure and business travelers and offering services such as lodging, dining, meeting, and events. Unlike the manufacturing companies such as General Motors, IBM, and Boeing aircrafts, that they have focused on producing tangible goods, tourism and hospitality business specialized in delivering tangible services and experiences to their customers. So, understanding the differences in inventory management and operating cycles between manufacturing and tourism or hospitality businesses is essential for students studying tourism and hospitality management, as its impact such approach to managing resources operations and customers experience within the industries. So let's start with the income statements of a merchandising company. The income statements of merchandising companies have an additional expense items called cost of goods sold. In fact, the cost of goods sold accounts represents the cost of merchandise sold during the period to help earn revenue. To be more detailed, cost of goods sold is presented as a separate expense item on the income statements, and net sales minus cost of goods sold equals gross profit. Gross profit is the amount left after subtracting the cost of inventory sold to cover all other expenses and profits. So revenue from tools sales reflect the primary source of income for the business sector's company, which is sale for tours or travel package. So as you can see, revenue from tour sales is about $1,200,000, and cost of providing tours is replaces as a cost of goods sold. In fact, cost of providing tours here is replaces with cost of goods sold. To represent the direct cost, to represent the direct cost, the cost of goods is represent the direct costs associated with providing the tours such as transportation, accommodation, meals, and guide services. And the next item here is operating expenses and in summary expenses. So operating expenses here is reflect the various expenses incurred in running the tourism business such as marketing, administrative cost, utilities and maintenance. And finally, we have net incomes, and in this case the net incomes equal 160,000. Also, gross profit and net income number item number 3, gross profit, and item number 4 here, net income. Figures are adjusted accordingly based on the revenue and expenses items specific into two sectors. So gross profit is a useful means of measuring the profitability of sales transactions, and cost of goods sold, that here we noun it as a cost of providing tours, is represent the expenses of goods that are sold to clients. So in fact, the revenue minus the cost of goods sold or cost of providing tours in the tourism sectors equal to gross profit, and gross profit minus expenses equal the net income, that here equal $160,000. In fact, you can see here a very general and brief income statements of merchandising companies. To be more specific, the income statements of a tourism companies may not have a specific line items called cost of goods sold, here this item, and instead because the tourism company don't typically sell tangible goods. However, they do have a direct cost associated with providing their services, which can be analogous to cost of goods sold in merchandising companies. So generally, because the cost of providing tours for tourism or other most important tourism companies, they are direct costs that associated with providing the services. In this course, we know the cost of providing tours analogous or same with the cost of goods sold in other merchandising companies. And for tourism companies, the direct cost incurred in delivering services such as transportation, accommodation, meals, tour guides, and entrance fees can be considered as the equivalent of cost of goods sold. And in fact, these costs are essentially for delivering the tours or travel expenses that generate revenue. Just like in merchandising companies, subtracting the direct cost from revenue or sales yields the gross profit. And in the tourism industries, the gross profit represents the amount left after covering the direct costs associated with providing the tours or services. And this amount is then used to cover all other expenses such as marketing, administrative costs, utilities, and maintenance, and the generate profit for the business. So the revenue for the tools in this case equal $1,200,000 minus the cost of providing tools, that we consider this item same with the other merchandising company in other industries in this course, because they in fact represent the same concepts for us. So 1,200,000 minus or less cost of providing tools 720,000 equal $480,000 gross profit. And after gross profit we have operating expenses, so $480,000 minus $320,000 operating expenses is 160,000 net income $160,000 a month for adventure tours in the condensed income statements for the period that ended in December 31st, 2023. Okay, in the next step, we want to discuss with together the accounting system requirement for merchandising companies. In fact, in the general ledger, the control accounts for reservation receivables indicates customers owe $7,000 for book tours or accommodations here. This is the total $7,000. However, the control accounts does not provide the detailed information about how much each customer owes. And to obtain this information, we must refer to the reservation receivable subsidiary ledger. So the detailed information for each specific customer reservation can be found in the subsidiary ledgers here. The detailed informations for each customers here, they have a detailed informations about adventure seekers incorporations, and next we have the subsidiary ledgers about the specific customers Seren retreats limited liability companies. So for each customers we have subsidiary ledgers in details, and upon examination of the subsidiary ledgers, it becomes clear that Adventure Secure Incorporation owes $2,000 for group tour booking, while Serene Retreat Limited liability companies owes $5,000, as you can see here, for the block of room reservations. It is important to note that the total of the balance in subsidiary accounts equal the total balance in the control account, which in this case is 7,000. So the total is 5,000 from the Serenity Limited Corporation plus 2,000, the total liability from Adventure Secure Incorporations equal 7,000, the total amount of liabilities. And this reconciliation ensure that accuracy and competencies in the tracking reservations and outstanding amounts out by customers. In fact, this adjustment provides the scenario familiar to tourism management students where reservation or book are tracked similarly to accounts receivable in other industries. In the next step, I would like to continue our journey with one economic recording and accounting procedure recording for scenarios to understand what together with together is how we can record the different economic event scenarios in the merchandising company under the perpetual inventory system. We explain in details the difference and definitions of different inventory systems in next part of the course, but now we want to focus on the accounting procedures of different economic events in the tourism merchandising type companies. So let's say Adventure Gear Stores is purchasing 20 sets of high quality camping tents on accounts from the Outdoor Essentials Suppliers, and each set costs $300, resulting in total purchase of $6,000. So the payment is scheduled for 30 days from the date of purchase. So we purchase a 20 number of sets, and each sets equal $300, and totally we have 6,000 amount of dollar to record it. Now we want to record this $6,000. In the perpetual inventory system, every purchase and sales of inventory is recorded directly in the inventory account, and this helps maintain an up-to-date balance of inventory on hand. So in fact, in the perpetual inventory systems, all informations about the inventory of merchandising company is up to date continuously. So look at here. On the September 1st, the date, two accounts involved in this purchase. First, inventory with some experience in decreasing. And second, outdoor essential suppliers. So inventory, this account is debited because we are increasing our inventory with the new purchase. Whenever we experience increase in inventory, the inventory become debit. Why? Because inventory belong to assets accounts, and generally increase in sub accounts of assets is recorded under the debit. The next accounts is accounts payables, because as the economic events said, we make this purchase in an account mode. So we should use accounts payable or accounts receivable, because in this case we purchase or we buy something, we should use accounts payable because we purchase something and we want to pay for it later. So account payable for outdoor essential suppliers. So account payable for outdoor essential suppliers is the other account that also increase because the amount of our liabilities increase. The account payable is belong to the liability, and we know that increase in liability sub accounts always are recorded under the credit. So this 6,000 should be debited for inventories and also should be credited for second account under the account payables, outdoor essential suppliers credit. So in fact, we should debit inventory because the adventure gear stores purchased the camping tents. The inventory accounts is debited by $6,000, and this reflects the additions of the new tents to the company stock. And second, we credit accounts payables because at the same time we credit the accounts payables accounts by 6,000, and this shows that we have a liability to outdoor essential suppliers as the payment for the tents is scheduled for 30 days from the date of purchase. Finally, this is the way that's how we should record a purchase transactions in the perpetual inventory system by maintaining up-to-date inventory records. So in the perpetually inventory systems, or informations about the inventory is continuous up-to-dating. So we have information that is up-to-dated and it's suitable for making informed decisions. And if you found this video helpful, please like, comment, and subscribe for more accounting insights. And thank you for watching, and see you in next time.